All right. What's up, guys? We're here in Dartmouth. We got Paul Salcone from North Point. Paul,
Hey, Phil, thanks for having me on today. Appreciate it.
welcome. How's everything going today?
Things are going well. It's a Friday. We're here having some fun. Good.
Stressful morning?
Well, a little stressful. Got a loan close and another one ready to close. So it was a efficient day.
Part of the business.
It is. If it's an easy day, it's probably not a good day.
Can't be all daisies out there.
Yes, definitely can't be.
I figured you'd come on and we would talk a little bit about a new program that you have going on, which is very exciting to me. I mean, I've been seeing this out there on the forums, on the social pages for investors, and I've been wondering about it and wondering when my right hand man lender would have this loan option, the coveted DSCR loan.
That's correct. The debt service coverage ratio loan. It's a portfolio loan. We call it the investor cash flow loan. And essentially this loan, what it is, it's a great program first for investors, could be repeat investors, first-time investors, self-employed investors. Really, this program is geared toward being a no-doc loan. What that means is this program, we look at a property. Let's just say, for example, we have a 3 or 4 unit property. Take a 3-unit property, let's say, and let's just talk about, say fair market rent, make it easy math, $2,000 per unit, okay? 3-unit property, you're looking at 3 units at $2,000 each, $6,000 a month is your fair market rent. Now that's determined either by, lease agreements in place on the property or by what the appraiser determines, fair market rent on his appraisal report. So we'll go with the $6,000. As long as the mortgage you're taking out, as you the buyer, is less than or equal to the $6,000 that the rent brings in, you're approved. Dollar for dollar now. It's not a percentage of the income. It's dollar for dollar. Whatever rental income this property generates, you can use, as long as that number is the same or more than what your mortgage will be, you're approved. It's cut and dry. Imagine that. I mean, not even having to worry about income documents, W-2s, pay stubs, tax returns. It's a great program. You really only need credit score. Ideally, you want to be at 660, but I can even do them at 620 with the right down payment. Minimum down payment requirement is 20%, but as you know, any investment property program out there requires at least 20 to 25% minimum. So it's essentially the same guidelines as conventional loans, yet you only have to put down the 20 to 25%, and rental income covers the mortgage. You're approved.
Wow. That's really something right there.
Yeah, I mean, right now in this market today, how many people, clients of yours even, investors, repeat investors you work with for years, you talk to them, hey, I want to buy another investment property. All of a sudden, they go to get pre-approved, they look at tax returns. And let's be honest here. If you're a shrewd investor who, knows your write-offs and knows limitations, when you look at your tax returns, you're going to see, hey, listen, on Schedule E, I have negative rental income. Now, given they're making money on paper, but there's expenses, repairs, they write off depreciation, different expenses they incur. And now on the tax return, while they might have income up top, after all the expenses, they show negative in the bottom. So at that point, it's very difficult to qualify someone with conventional because we look at 2 years of tax returns. So now this program allows you to, hey, we don't care about your tax returns. We just want to see that this property will generate income. You have a good down payment, credit scores at least in the 600 range or higher. Okay, we'll take a chance because we know this market and rates, even rates being higher, it doesn't impact you here because typically you would never even purchase the property if it didn't cash flow. So you're doing this research before you put an offer in. You know what fair market rent is. So it's almost like it's almost just having the underwriter confirm what you already know. And that's why this program makes sense. And you can use it up to, typically we do 7 to 10 loans even. So you can do numerous properties, and each one we only look at that subject property. Everything else is irrelevant. Any other properties in your credit report, we don't care about. We just look at that one. So yeah, take it for its face value. It's a very good program.
Wow. So mid sixes for a credit score. Yes. Remind me on the average down payment here.
20% down is the minimum. If you're a first-time investor, they require 25% down. But again, you can put down more if you'd like. And keep in mind, this is geared more toward 2 to 4 unit properties, but technically you could buy a single family home with this program as well. Like say a property, a beachfront property maybe that you're going to rent out throughout the year. Maybe say the 1 week, who knows, hypothetically. But those can also work as well. So keep that in mind. 1 to 4 unit properties. Fair market rent needs to be obviously where it makes sense on paper. And because you wouldn't. Let's be honest here. This program, it almost kind of like intuitively, would you buy a property if the mortgage was $4,000 a month and rental income was $3,000? Why would you buy a property to lose $1,000 a month? So you wouldn't do this anyway, you would think.
Yeah.
Even if, so it almost has to make sense before you even do the application, or you wouldn't even consider buying the house.
Right.
You know.
What am I missing here? What catch did we miss here?
I mean, catch here, you obviously have to have some money for a down payment. You know, you have to have decent credit. I would say, 660 plus is ideal. I mean, 700 gives you the best rates. You do need 6 months reserves, so you have to have some money in there. It could be money in a 401k.
So that's important.
Yeah, yeah. And just one other little caveat to this particular program that I like. So everyone thinks, okay, I need 20% down minimum, 6 months reserves. Okay, what if I don't have it? Well, here's the thing. We do allow gift funds in this program as well, which most investment programs don't like gift funds. If you put down 30% or more, you can get money gifted from a family member, a close friend. I actually have a client right now as we speak. I'm doing one this week. And they're buying a property in Middleborough, Mass. And long story short, this woman literally only has about 5% of her own funds. She's getting 25% gifted from her son. And we're allowing the loan to go through.
Wow.
So think about that. You have gift funds. You don't even have to have income on paper. You just need to show that ability to repay with, down payment and the income for the rent. I mean, to me, this should be the best program out there right now. It's hard money without dealing with the hard money rates and points and everything else associated with hard money.
Right.
Yeah. So yeah, there really is no catch. I mean, the one thing you could say, potential downside, there's a 3-year prepayment penalty. So technically, if it's something you're going to sell within 3 years, there is a prepayment penalty. But even so, most programs out there have that. In hard money too, I mean, you're paying points up front. So it's almost like the prepayment penalties in the front on the hard money.
Yeah.
So keep that in mind. So yeah, this is a good program here.
Wow. Very impressive. So, rates. What are we seeing these days, Paul?
Well, I mean, rates in general, we all know they're high. I mean, relative to the last 7 to 10 years, they're very high. I mean, rates haven't been this high since late 90s, early 2000s. So let's be honest, we're probably looking somewhere 7s to 8s right now, based on credit score, based on down payment, based on program. But, at the end of the day, if you buy a property, I always tell people this, you're buying a property, you're basically buying the home, you're renting the rate. And everyone's goal, I would think, and anyone who follows the market, the industry, knows that rates will go down eventually. I'm hearing next year, 12, 15 months, who knows? I don't have a crystal ball. No one does. But we're speculating here that rates will go down prior to the new election next year. And let's just say, hypothetically, you're getting a rate at 7.5% today. You lock in, you close. On paper, you obviously qualify because you close on the house. But the next 12 months, you get down to, say, 5.5. That 2% difference could change your payment $500 a month. So my thing is, if you can qualify today, how much better off are you going to be financially in 12 months when your payment goes down $500 or $600 a month?
Yeah.
It's a no-brainer there.
Right. So I tend to always be pretty authentic. So I think that we're definitely in a little bit of a jam right now.
Sure.
As far as, the industry goes. What I'm dealing with, what you're dealing with, rates are high.
Yeah.
Prices are high. But one thing's for sure, prices always go up. The rates come down eventually.
That's correct.
Historically.
That is correct. And in this market, like I said, it's a double whammy because you have the high rates and the high prices. Normally, when rates are really high, prices start to maybe not drop, but they kind of even out, and they haven't done that in the last 6 to 12 months. We know this.
Right.
But when the rates do go down, here's the other side of the coin I've been hearing. Okay, so you don't want to buy today because rates are high and prices are high. But you know what? If rates go down, prices are probably going to go up. And beyond the prices going up, now there's going to be more competition because more people qualify with lower rates. Therefore, when you try to get a house, you might have to overpay even more than normal because you have competing against more people than you are in this market. In this market, things have shifted now where you have bidding wars, yes, but they're not what they were 6 months ago or 12 months ago. Wouldn't you agree?
That's for sure.
So I think you take that in consideration. If you can get the houses at today's prices, knowing you're going to refinance down the road, it's better than hoping that rates go down and that prices stay the same, because it's probably not going to happen. Right. So I think the way to go is if you really need a house right now, don't let the rate scare you. It's a short term, it could be 8 months, could be 10 months, but you're paying 30% interest on credit cards right now at department stores, 20% interest on credit cards. No one doesn't go buy a shirt at Macy's or a computer at Apple. They still use their credit cards for those, and not everyone can pay them in full.
Yep.
So you're okay with paying 30% or 25% on credit cards. Why is 8% scare you on a mortgage?
Yeah.
All things considered. I'm just throwing it out there.
Of course. I mean, like I said, the prices historically continue to go up since the beginning of time. Like we're not going back to the pricing of the 80s and 90s.
Sure.
Like ever.
No, this is never going to happen again. Inflation, people say, inflation, well,
that's what I mean. It's like, there's a lot of concern out there. Everything's too high. if you need to buy, you need to buy. But if you think you're going to wait another 5 years, let's say the rates take that long to get back to low levels or lower
Yeah.
levels, what are prices going to be like? I have to agree with you fully that if the Fed was to suddenly knock the rate down significantly into the next couple of years and bring it back to the levels that we were seeing before,
Yeah.
fours and fives, I think that would just heat everything right back up, and we would see all the same competition, same overbidding, same bidding wars going on, if with prices the way they are right now.
I agree. And see, the only thing right now that makes it a little bit unique as well is, so people say, oh, it's a good time to sell your home. Of course it is. Prices are higher than they have been in the last couple of years. Great time to sell your home. Obviously, all the downside is, well, if I buy a new home, I'm going to pay more for the new house, higher interest rate. So it's like hard to motivate someone who is in a rate at, say, 3% right now in their current home. And maybe they can get another $100,000 for their house, but if they're paying another $80,000 to $100,000 for the new house, and then going from a 3% rate to a 7.5%, 8% rate, that's where we have this disconnect. Whereas if rates are at 4 to 5% right now, while they're still a little higher, people would be like, you know what? I'm okay with paying 1% higher because I'm making a lot more on the sale of my house. But when it's 4 to 5% higher, it kind of makes it, that's why inventory, I feel, is lower than it should be because of this. I think people would jump on, hey, if I can get a 4% rate, I'll sell my house right now and eat 1%. Right? Wouldn't you agree about that? That's hurting us a little bit, more than it used to?
Things have changed so quickly.
Yes.
I think that it's a bit rapid and sort of trying to make up for errors in past,
It's corrections. Essentially, it's a corrections the government's trying to artificially place. We're trying to curb inflation, so artificially bump rates to the point where it brings the market down, but it's backfiring because there's still enough demand and not enough inventory where it's not catching up. And it's only hurting the people that really, it's the people that they need the money the most or need the home the most. It's hurting those people. The investors, I mean, hate to say it, if they're still making profit, if the rate's 7% or 8%, they're still making money. But the first-time home buyer whose debt-to-income ratio is right at that max and 1% higher bumps them out of a chance getting a home. Those are the people being affected the most. The government doesn't realize that. Or the people buying second homes. If you're buying a second home, I don't think interest rates impact you that much.
Yeah.
Maybe a hair, of course. But at the end of the day, you're not living, meal to meal, day to day. People that are buying, houses for the first time out of college, a couple years out, already have student loans to begin with. Those are the people you're affecting right now. And I think long term, you're going to have, it's going to take a while to dig out from this. I mean, I think it will get better, but I also think we're not at its worst point yet. I think it will get a little bit worse before it gets better. Hope I'm wrong, but that's what I'm hearing and that's what I'm feeling right now. You might have another rate increase before the end of this year.
Yeah, that's what it's looking like. Another rate increase before the end of the year.
Go figure.
So, yeah, I think that what's happened over the past 3 years, obviously in combination with a international worldwide pandemic that nobody was expecting. I mean, what a storm for the past 3 years. And, we were just doing a little something, me and Antara, before talking about the industry in general. And it's just like, talking about agents and them jumping into the industry during this very hot time, closing potentially a lot of sales during this extremely hot, low rate, lower price market that's obviously increased.
Yeah, we all did well. We all did well.
Same with lenders, and it's like I told him, you see a lot of intros to new agents and new lenders joining brokerages and mortgage companies, but you don't really see the exits. You don't see those posts on social.
No, you absolutely don't. And you do the math, what percent of people have left the industry in the past 6 months? I don't know exactly, but I have to think a significant amount. I would say at least 30% as a whole, from between agents leaving the industry or maybe doing it part-time versus full-time, loan officers leaving the industry either because they can't write enough loans to survive or because the company had to downsize or lay off because they didn't have the production needed to keep everyone in the office.
Right.
So I think combination, you're right. And you don't hear that as much. And I also think, though, in the same token, and not that you want to look at it this way, but if you have people leaving the industry, it's also more opportunity for the people who stay.
Yeah.
Because there's still going to be 10,000 people buying homes a year. Okay, if that's the number. If you have 300 agents or 3,000 agents, still you're going to have 10,000 sales. So less agents out there, more per person, so to speak. Lenders, same thing. Less loan officers, there's more for people who survive. Not saying it's right, but that's kind of what's happening right now.
Yeah, and really only the strong survive in this industry.
Survival of the fittest.
And it's not all sales, make money, make money, make sales. I mean, like us, for example, you know how hard I grind and how many calls I bang to prospect for new business on my end. You know, I don't pay for like leads on, you know, your typical Zillows or these websites
Sure.
that cost a fortune now, by
Oh,
the
they do,
way.
and they're
I
very
mean,
saturated as well.
it's
Keep that in
just
mind.
like you get nothing for the money like you used to. You know, 4 or 5 years ago,
Yeah.
you got a lot for the money,
You can
and
convert
you
too.
could convert and get leads and close deals just paying 500, 1,000 a month for Zillow leads. You
Now
know,
it's 10 times that to get yourself leads and even have a chance. And now you have to close
yeah,
how many just to break even. And it's almost like you're chasing. You're chasing. I get it. Some people like that, and not knocking lead generation, platforms and programs. But at the end of the day, if that's all you do to get your business, it's gonna be very difficult to maintain and to survive.
yeah, for
It really
sure.
will be.
And it's like lenders out there. I've dealt with several, many actually, and you are a standout, in the
Well,
industry.
thank you,
So
Phil.
I'm
Thank you.
gonna give you a little,
Thank you.
props, kudos,
And you are as
and
well. You work your butt off every single day. I see you in your office grinding your little call list, check marks, so many calls a day, so many follow up emails. Those are all things that, trust me, that's how you get to where you are today. No one in this industry right now who's flourishing doesn't have that mentality, that work ethic. You can't coast anymore. You have to grind every day.
right. In the grand scheme of things, it's about helping people.
Yeah.
It's about getting someone into a home and finding a way. And connecting myself with a lender like yourself with North Point. It's been a very smooth process so far, and we're putting together a business more and more, and it's smooth business, and it's really helping our clients achieve their goals in a positive way with a
Yeah.
positive result at the end, not just like, oh, that realtor helped me but he's just like sucks, and or that lender helped me, they just wanted to make money. I mean,
Yeah.
I think that we're doing good business. i, I take that back. We are doing good business. I firmly believe
Yeah.
that, and I think that it goes up from here, and we survive these market
Yeah.
changes the best we can. Everybody does.
That's what it is.
We're all a team.
Yeah, when you're sincere, when you work hard every day, when your clients appreciate you, they refer you. Even if it doesn't happen today, you have those seeds planted for tomorrow. You have your brother or your friend's brother or cousin or mother, who knows where it goes. And if you service them right, took care of them, they're gonna remember that. They're gonna refer you how many more times because of it. Same token, if you take advantage of someone or you screw them, so to speak, now they're never going to forget that, and they're going to go out of their way to basically
Right.
let everyone else in the industry know. So good things are always, you're always rewarded. When you do bad things, you pay the price, and many times you never get back from it. You never overcome it.
Yeah, I mean, I've been in this business for years, as have you. And one thing is for sure: the lender I'm going to align myself with has to be on the same wavelength as me. And
Sure.
there's a certain expectation there, as far as what I expect, obviously what my clients expect, and I have to trust sending the business. This is not just about people pleasing and telling people what they want to hear. I want to make a big point about that. Basically, I don't want to ever deal with a lender that tells me what I want to hear, tells a buyer what they want to hear, all for it to go bust, a week before closing is scheduled. Like, this isn't going to work on something that was completely preventable. That is how you build a bad reputation.
Oh, for sure. I mean, I can tell you the top of my head, people I've had bad experiences with, I never forget those. They almost outweigh the good experiences, because when you have a deal blow up the last minute, or because of someone's lies, or someone not just not being fully transparent from day one, and that's a bad taste in your mouth. Everyone, including everyone involved in the transaction, will always remember that. And it's unfortunate. A lot of people, they thrive on business that way, or they'll tell them what they want to hear to the end, and maybe they get a deal every now and again because of it, or an additional deal. But they're exposed, and
Yeah.
with social media today, with the amount of everyone out in the market, I mean, people talking everywhere. You do this long term, you're going to be out of the industry, and you're going to be you're going to be that person no one wants to work with.
Yeah, just the stuff I see my kids put out there, and
Yeah.
even some of the stuff I see my colleagues out there in the industry putting out there. I'm like, really? I mean, certainly there's people putting out good content,
Oh, yeah,
on
of
social
course.
all the time, which I can appreciate that. But when it comes to reputation and credibility, I mean, that's like my number one thing. If anybody ever tries to question what I stand for, or how I operate, or how my business goes, good luck, because I always have my client's best interests in mind, always, and always deliver on what, I promise. It's like if I have a client that, wants to buy something and I send them to you, I know already that you're going to tell me if they don't qualify right away and if this even makes sense. And I'd rather hear it that way. I don't ever want to send my business to somebody that is going to tell me, "Oh yeah, we'll make it work," or "Yeah, I'll make it work. I'll make it work for you," like I've heard in the past. No, I'd rather hear it straight from the beginning,
Yeah.
so that I can tell them we need to come up with a different game plan, because otherwise we're just going to be running around looking at houses, wasting time, all for you to fall in love with something that you can't actually
Obtain. Yeah.
obtain.
No, I agree. And that's the biggest, to me, that's most detrimental for newer loan officers or even newer agents. You never want to tell anyone no, or I can't help you right now. But see, my theory is, number one, like you said, you don't want to waste people's time, get them all built up. It's almost worse to give them that false sense of, oh yeah, you're good, we'll make this work. That hurts more than, when they get to the finish line, they can't close, than just saying, listen, you can't work, this doesn't work right now. Do X, Y, and Z. I won't say no to someone. I'll say, listen, right now, the way things look, you don't qualify today. Do X, Y, and Z. Pay off some debt, maybe save some more money for a down payment, work on boosting your credit score, maybe pick up some more overtime at work. Combination, I give you a game plan. And you do that, we revisit 3 months, 6 months, whatever it may be. People appreciate that. And honestly, versus saying no or saying yes, but, well, maybe. I don't want maybe. I want to give you a letter knowing that you qualify. And you want a client that you put an offer and you want to know that it's going to the finish line if it's accepted. Not you cross your fingers and hope it gets there. You can't live like that. You can't sleep at night.
No, I don't like maybes. So, I mean, for me, this conversation is totally public. It can be put out to consumers, agents, lenders, everyone alike. There's no secrets here. There's no internal info. I mean, for me, when I first started, I used to do a lot of running around with buyers that basically never came to fruition. Nothing ever came to fruition. So, my biggest piece of advice to newer agents is to make sure your buyer is pre-qualified. I mean, you could fall into a trap, starting out in this business, running around to easy homes or lockbox houses or whatever, and it turns out that they can't purchase anything.
Yeah, I know, you're right. And like I said, that's the wrong way to do business. You'll never maintain relationships. You'll never build more relationships. Referral basis. If that's how you do things, you got to do it right. And sometimes people, this is one of my biggest pet peeves. Hey, I want to get pre-approved. I want to put an offer on a house. Can you just give me a letter? Well, if I'm just giving you a letter, what am I really doing? I'm giving everyone a false sense that you qualify. Agents, sellers, buyers, like, what am I really doing here? Wasting time. And on top of that, if I'm not collecting documentation, I hate to say it, even to my best friend, I mean, if you're self-employed, do they read tax returns every day? No. They might think they make this much money, but when I look at the returns, okay, this is what you make, this is what you actually claim. And that's two different things. So when people say, oh, I make this much, hey, you know what? I believe you, bud, but I really want a tax return or a pay stub or a W-2. At least I know I'm doing my job. Because if you show, your job is to also look out for their best interest. And if you start showing them properties that they don't qualify for, essentially you're almost giving them a false sense as well. We all have to be held accountable.
Right.
And people who are most accountable are the ones I think are most successful in this industry.
It's just about doing good business, like not wasting time, because if you're just going along with what, a potential client wants to go view properties, view this, view that, all for it to result in no purchase, like, what was even the point of that? I mean, you wasted your time, but you also wasted their time. I mean, you have to explain to people that this is not worth the time right now if it doesn't make financial sense, right? I mean, I have no problem doing that now. I think that's harder for newer agents, and I think that a lot of this convo kind of turns into that direction of things, because I like to talk about, my past experiences, where I'm at now, how I kind of see the industry, how I see new agents come into the mix. I mean, I deal with them all the time. I mean, I typically deal with listings, so I have buyers coming in co-broked into my listings, and the way that they handle things is not exactly always ideal.
Sure.
Like you said before, when it comes to, qualifying people, I mean, it becomes like a slippery slope, I think, a lot of the times with friends and family.
Oh, yeah.
It's like, need a pre-approval. Oh, I'm good. Or,
oh, yeah, you know me your whole life. And you know what? That's great and all, but but this is buying a house.
That's a tricky one.
Yeah, this is not borrowing $20 for a beer at the,
Yeah.
This is a little bit different.
As a new agent dealing with friends and family, you have to just figure out how you're going to handle that. But You know, sometimes you'd be surprised. You think that your friend or your buddy is well qualified, your family members, ready to go. Turns out they're not. I mean, I just got somebody referred to me, wants to buy up here. They're renting right now. It's like my mother's cousin or whatever, and basically there's more to it. It's not to say she doesn't qualify, but there might be a house involved that needs to get sold, and there's all this going on in the background that you know there's more to it. So
Yeah.
why are we going to look at properties if we're not ready? But
No, I couldn't agree more, and that's why we're talking about this today. It's a very important topic, and we know in this industry, especially with inventory so low and open houses being busy, you have to have all boxes checked. When you come in, you're gonna be ready to go, ready to put a strong offer in, not hoping or I'll get the pre-approval later. Sorry, you need to go there pre-approved, ready to go. The agent needs to be ready to go, showing the properties, put an offer in, you're ready. You don't have any reservations at all. If you do, you're really not going to be taken seriously in this market. You don't even have a chance, in my opinion.
so let's talk about something that's coming to mind. So when I see a big box shop pre-approval come through on one of my listings, it feels different. So tell me, what is the real deal, or what can you say about some of these rocket mortgages and these huge companies, nationwide mortgage companies
Yep.
that people see an ad for? The rate looks appealing, this and that, the fees look appealing, everything looks more appealing than anything else they're hearing. They go apply online and they might get a pre-approval in a couple of minutes, right?
Sure.
Right online.
Yeah.
What's the deal with these
Well,
companies?
not trying to bash anyone in particular, but some of the bigger companies, the online lenders, the ones that maybe licensed or throughout the entire country. Number one, there's no local person you're working with. You're working with someone across the country. You have no idea who they are. They have no idea who you are. You're a social security number one. So there's no relationship there at all. Secondly, because they're working at online or working via voicemails or Zooms versus face to face. Sometimes people they'll give you things almost as like oh yeah, we'll give you what do you need. It's almost like they're giving you whatever you want to hear. They don't really do their due diligence. They don't take the time, number one, to get to know you. Know your situation, where you're at right now. Where do you live right now? What do you pay for rent? Those are questions I ask. Where do you feel comfortable? Like long term, where do you want your monthly payment to be at? You might qualify for more, but what's your sweet spot? They just want to get a deal done. I'm not blaming them. I mean, it's sales, but then also documentation. Let's be honest. You need documents. You need tax return, pay stub, bank statements. License, W-2s. You need this online. Sometimes if they give you a letter and you didn't even give them your social security number, how do they give you a letter? How do they run your credit? Even if you did give them a social security number, if you didn't give them a pay stub, you just told them what you make verbally. So they're going by, not that you're a dishonest person or anyone is for that matter, but if you're saying I make $60,000 a year, okay, great. They're using that number, but maybe you're saying 60,000. You forgot that. You know what? Oh yeah, but a couple of weeks I didn't work, I was out, or my overtime is not guaranteed, so I make that when I work full overtime. And every week do you work overtime? So there are things that you might not even think about subconsciously that you just, oh yeah, I make this much because you think 1 week you made that much, therefore that's you make a year. The same every week. So these are things in human nature, and I think most people have to realize that no matter how honest you are, by accident you could say something or not even do the math correctly. And if you don't have documentation in place, and I give you a pre-approval, think about the chain reaction you started from the time you get the letter, putting offers in, to maybe not closing. The people that are selling that house need to sell a house to buy another house. Now they can't buy the home they're trying to buy because your deal backfired, which started a chain reaction throughout. And think about how that one mistake, that one little blip in the radar from day one could cause how many problems long term. And not saying that, look, we've all made mistakes, but I will never give a pre-approval letter out without having proper documentation. That's the biggest problem right now. How many clients we have? 8 clients we're working with. Hey, Phil, your friend Mary, she still didn't send me your tax returns. Or I'm still waiting on their pay stubs. And given they get frustrated, but until they do it, I hate to say it, we're wasting our time.
Yeah.
And that's the biggest hurdle to overcome. But the bigger banks, the shops, big shops as you talk about, they just want to say yes, 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 and give letters like they're candy. And that's a problem today in this market. And I think every realtor who's listening today and who's been in the industry has dealt with this before. And those people, when you hear that happen, you never forget. And especially if it's an agent they work with that maybe didn't do their part either to vet the lender. Hey, my client's got a letter from you. Can you just want to make sure, did you run their credit? Did you, collect documentation? I think we all should be doing that. Unless it's someone you work with all the time, fine. But if it's someone you never worked with before, you definitely would call and find out what's going on, I imagine.
Yeah, I mean, I always call. So, not only do I deal with buyers and help them and try to steer them in what I feel is, the right direction in
Yeah.
a lot of cases.
Hmm.
It's basically you're okay, you want to shop and you have this pre-approval from this company, that's fine. Are you open to another opinion?
Sure.
There's no force in it. There's no force in the subject. Like, I won't work with you if you don't work with my lender or whatever. But I at least ask to see if they're open to it because I know it's most likely going to go smoother, especially if it's somebody that they just clicked on an app online versus like if they know the person and they've done business with the person before on the lending side, sure, that we may have no problem at all. But when these pre-approvals come through on my listings, there's a lot of question marks. I mean,
Yeah.
it happens all the time. It's like, I don't want to name names or anything, but I mean, these bigger companies, there's just
Yeah.
so much more red tape.
Yeah.
There's so many more things that come up and get flagged. And then when it comes to like a personal experience, it's like you're dealing with a mega corporate and you can hardly get these people
Oh, it's probably
on
10
the
people that are
phone
servicing
ever.
one loan. You don't have one contact person. And to me, anyone who's successful, anyone who's done this for a long period of time, recognizes the value in having people you work with that you know well, that you have the same, personality, work ethic, even like the way of conducting yourself, like everything. So you need to have and again, not everyone's different. So not one lender or one realtor can service everyone, but you need to know certain things that are non-negotiables. You need someone you can trust, someone that's going to answer their phone even when it's weekends, nights, holidays, because we all know how time is of the essence here. Putting offers in, getting updated pre-approval letters. So that's the key, and that's why it's so important to have your team in place. Because again, having an attorney you work with, insurance company referral, inspector, appraiser, even sometimes. Obviously, if you need work to be done, contractor, realtor, lender. If you have all this in place, every deal, while it's never an easy deal, they seem a lot easier. When you don't have that, it's a missing link, and it really causes problems long term.
I mean, you got to try your best to develop like a dream team.
Yeah,
in this business,
and that's what you sell. The whole experience. And again, if we all work together, the same common goal, the client's going to benefit. We're all going to get to the finish line.
Yeah. Especially for us, I mean, like for realtors, I think that, having a go-to lender, having a go-to title attorney, having a go-to insurance, we kind of, have the whole, we're the start and then, it trickles out that way.
Yep.
But yeah, I think that there can be a lot of complications out there in dealing with these bigger companies was my point. And it's important to know who you're dealing with and try your best to deal with it. So, for newer agents that are helping buyers, I think, like I said before, best thing you can do is interview lenders, get referrals to lenders that, you think, are going to work well with you, and you have to, vet people, and it takes time and it takes experience. So it's tricky. I mean, word of mouth and referrals are, serious. It's a big deal in the business because like as a new realtor, you're going to get a lot of lenders are going to just throw themselves at you, day in and day out, every networking event, everything. So you just have to be careful who you align yourself with for not only the sake of a deal, but your reputation as well, so it's like an interview.
That's what it's all about here. That's what we're talking about. It's all about that. It's almost like a trial and error. You might give an opportunity, randomly it happened, and all of a sudden you like the experience, and now you reach out, let's grab a coffee, and sometimes you hit it off, all the times you don't, but you never know until you start building. And once you find a few you like, or one in particular, or whatever it may be, that's what it's all about in this industry right now. I think that's more important than anything else, is having the right relationships and the trust with each other.
For sure. I think that on that note, unless you have anything else to add or any other
No, Phil, I think we had a great session today.
Yeah, it's always good to see you, Paul. Thanks for coming in. We'll wrap this one up, and we'll have Paul back on some other time.
Sounds great.
Paul, good seeing you.
Good seeing you. Looking forward to the next session.
That's it.
Thank you.
Looking forward to the Celtics season, huh?
Yeah, that's coming. Tonight's the second game of the year.
That's it. All right, guys. Until next time.
Thank you. See ya.